heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Caroline Hyde of Bloomberg's world headquarters in New York. Ed Ludlow is off today. This is Bloomberg Technology. Coming up, we go live to Capitol Hill, where the CEO of TickTok is defending his company against the US lawmakers who are calling for a ban. We'll bring you the details. And short seller Hindenburg Research targeting Block with its latest report. We break down what's about Cash App unit in particular that it's concerned about as the payments company plunges in trading. Plus, lights, camera, Apple. The iPhone maker spending billions to break into show business. More on the company's plans to raise its Hollywood profile and lure subscribers to its streaming service. All that, so much more coming up. Meanwhile, is Apple and some of the big tech seeming like some sort of haven on the day. We're currently seeing the Nasdaq up more than 2 percentage points, even though we continue to worry about some of the solidity in the banks today. The stock 600 is actually down on the day, largely dragged down by those banking stocks over in Europe. The pound, one to keep an eye on. Europe still trading, of course. The pound up 0.4%, as we do indeed see the Bank of England, like the United States Federal Reserve, hike rates by 25 basis points. Moving on, that's the macro picture for all of you technology investors out there. I'm looking at what's happening in Bitcoin, though, because once again, is this a haven of choice? Is this a move that we see as we still worry and remain cynical around a banking industry here in the United States? We're up 5% over the course of just this trading day alone, but we want to dive into the micro moves that are so important on the day. Let's get over to Bloomberg's Kriti Gupta.
Yeah, well, Caroline, you covered the macro pretty well. Let's get into the micro. Some major movers, to your point. We are seeing a lot of that kind of green on the screen coming from the technology space. Your four biggest index contributors, Apple, Amazon, Nvidia, is really in kind of focus here. And I really want to talk about some of the downside movers here, because to your point, Caroline, those crypto stocks are getting hit hard, but not necessarily for the fundamental reasons. Look, I meant the macro reasons. The Block story is fascinating. Hindenburg Research coming out with a short report saying, look, they are concerned about Block and the financing there. The Block, formerly known as Square, Jack Dorsey's baby, basically that's sending the shares down about 13.5%. We are still, of course, waiting for comment from Block as well. We want to talk about Coinbase getting quite the hit after the SEC yesterday after hours put it on notice when it comes to some of their offerings. This is really important in the crypto space because one of the big issues has simply been crypto ETFs and whether or not they can actually pass as a real moving vehicle. The upside though story is interesting. Caroline, at the top, you mentioned that TikTok hearing over in Congress. You are seeing Snap shares rally off that. Remember, Snap is one of the major benefactors if TikTok is indeed banned, at least on government devices stateside and around the world. So Snap shares higher by 4.4%. And Netflix, look, there's no fundamental reason here yet for Netflix, but you have to know a 9% rally is nothing to scoff at. One of the biggest heavy volume trades you are seeing today. Some rumors about kind of funding from Apple, but it's really something to keep an eye on, Caroline.
Kriti Gupta, such a great wrap up. Thank you. Let's get back to the key story of the day, which is, of course, TikTok CEO Shou Chew testifying on Capitol Hill as lawmakers call for a ban. Here's just some of what he's had to say earlier about China's access to its user data.
I have seen no evidence that the Chinese government has access to that data. They have never asked us. We have not provided.
Well, you know what? I find that actually preposterous.
I have looked in. I have seen no evidence of this happening. And in order to assure everybody here and all our users, our commitment is to move the data into the United States to be stored on American soil by an American company, overseen by American personnel.
We go now to Capitol Hill, where not only is Shou Chew still being testified over there, but Alex Barinka is standing by to bring us anything that actually we've learned that is new, anything in the arguments, the nuances that we hadn't heard before.
So Shou Chew is really coming in with a lot of what we've heard before, and that doesn't seem to be wooing what we knew to be some skeptical lawmakers. Lawmakers started this testimony, which is still ongoing, just behind me in front of a packed room, basically trying to establish the TikTok connection to China. Chew was queried on who prepped him for this testimony. Was it anyone from ByteDance? How often does he talk to Chinese executives? Has he heard from anyone in the Chinese Communist Party? It was basically an establishment from these skeptical lawmakers to try to connect TikTok to China. Now, Chu has come back with a lot of the facts we've heard before, that he is working on coordinating off user data here in the U.S., that he does not talk to the Chinese Communist Party. But I will tell you, Caroline, based on kind of him being cut off by a lot of these lawmakers, based on the times that the chairwoman has not allowed him to respond to questions, it doesn't seem like he's making any headway with this group in the room.
It really is notable as we still go to the room and see we've got a wonderful T-Live blog going on the Bloomberg terminal, Alex, that I know you're contributing to, as well as some of our other reporters. Brody Ford saying that at the moment, a Georgia Republican, Buddy Carter, once again talking about deadly TikTok challenges. That seems to be really the emotive subject, isn't it? Children in particular.
There it was, and I will tell you the room got very quiet earlier in the day when a number of videos of users talking about suicide were played for the committee. And that seems to be kind of the emotional heartstrings that the lawmakers are pulling on. What is TikTok doing to protect our children? Now, Chu did come back and say we have strong content moderation policies. We are putting in time limits for users under the age of 18. But I will tell you those answers as well were responded to by the lawmakers saying that's not enough. I hear what you're doing now, but I need you to commit to more.
Brief recess has been called. It's going to get busy in that corridor with you, Alex. Just set the scene a little bit, because you did a wonderful piece of digging on really the venture community in and around the relationship, broader relationship between US and China. There was an important dinner last night with Vinod Khosla there. We understand Peter Thiel as well. Who are lawmakers listening to aside from the leader of TikTok?
That's right. Literally within eye shot across the lawn from Capitol Hill, the Hill and Valley Foundation, where Peter Thiel spoke last night, was again this kind of line of anti-China sentiment. Basically, Peter Thiel compared TikTok to the U.S. homeless problem, saying it's something that we just can't fix. So there are folks on both sides of the coast here in the U.S. who are definitely not on TikTok's side. And I will tell you, in terms of allies here on the Hill, TikTok has had a few. We heard Representative Jamal Bowman speak yesterday at a TikTok event on the lawn outside of the Capitol building. But there are not very many voices who are piping up. And we've heard during this hearing from the other House, from senators who are also coming out with some strong calls to continue to try to ban TikTok.
Alex Barinka, we'll let you get back to trying to speak to some of those lawmakers. We thank you so much. Meanwhile, we got another one for you right now. Representative Jim Hines of Connecticut, who is on the House Select Committee on Intelligence, so deep knowledge on perhaps some of the data issues at stake here with TikTok, as well as, of course, the financial services is another area that you oversee. Jim, and Congressman, it's great to have some time with you. Please, can you just talk to us a little bit about, in February, you said you're not quite there yet about an idea of imposing an outright ban on TikTok. You needed to learn more. Do you feel you've learned more to make a decision yet?
No, I haven't. And let's face it, we're not doing a lot of learning today. Today is one of those moments in the Congress where a witness gets beat up. The witness is not allowed to answer the questions. You know, this is a moment of people expressing emotion. And I think, look, I've said this before. I work a lot in national security. TikTok is not on my phone. It's not anywhere near my phone. And people in sensitive positions, because, of course, TikTok is probably more accessible to the Chinese government than most platforms, shouldn't be on anybody whose phone who does this stuff. But look, an outright ban, this is a deep breath moment, right? Because the American people need to reflect on the equities associated with saying, sorry, the federal government is not going to let you use this media. And my question is, where's the limiting principle? What if all of a sudden we get really angry at Belarus? Does that mean that we ban access to Belarusian newspapers? All I'm saying here is that we need to think about what we really want to do about this. The CEO apparently this morning offered the idea of moving the servers to a non-Chinese country, to the United States. I think he said they could contemplate an ownership change. But before we all get on the bandwagon of having the federal government ban Americans' access to a particular media, we do need to reflect on what's the limiting principle? What does that precedent establish with respect to the power of the federal government?
It feels as though you're aligning yourself in some way with your constituents here. 150 million people use this app. But what would you like to see other than moving servers? Would a nice balancing act for you be a sell-off in some way? And what do you think to China's reaction earlier today, the Commerce Secretary there saying, well, that's not going on unless we approve it?
Well, I think in this instance, I'm actually not aligning myself with my constituents. I'm drawing on what I know about Chinese capabilities and what I know about the Constitution of the United States and the First Amendment. What I can tell you is that the Chinese are pretty darn good at breaking into anything they want to break into. They're not the only ones that are good at that. But, here we are, calling for a ban on TikTok when we actually haven't, as a Congress, been able to put in place a federal privacy regulation. So, yes, the Chinese Communist Party, we really don't want them to have our data. But guess what? Facebook, Instagram, all of these entities have our data, they sell it. I would suggest that the first thing we ought to do is actually pass some federal privacy legislation and then really get into the details of what a good solution might be with respect to TikTok. Maybe it is moving all of their operations outside of China. Maybe it is an ownership change. But again, this is one of those moments. It's a little bit like when we think we've really accomplished something because we rename the French fries in the cafeteria freedom fries because we're angry at the French, right? This is, again, a moment with a lot at stake in which we ought to be maybe a little bit more deliberate than we're being today.
Congressman, how optimistic are you that such a deal can get done around privacy on a bipartisan basis?
Well, look, at the end of the day, this is, let's focus on TikTok for a second. TikTok is obviously absorbing sentiment right now. They might want to think about what they might do with respect to ownership, with respect to where their operations are located, to maybe take this issue off the table. Privacy, frankly, this is an area where the Congress has been remiss, to say the least, right? I have two daughters who live on social media, and it just appalls me to imagine that pretty much anybody out there can buy their data, that they see their, in some instances, most intimate interactions, with commercial retailers and that sort of thing. It should happen, but sadly, and by the way, we had a little bit of progress in the last Congress, but it hasn't happened. So my advice would be, let's continue to study TikTok and think about the right way to handle it. But for God's sakes, let's get some federal privacy legislation done the way Europe has done, the way lots of countries have done. Until we do that, it's a little hard for us to step onto a soapbox and decide that we're going to take a massive moral high ground on issues of privacy.
At the moment, the evidence for you, TikTok CEO saying there isn't any evidence that China has had access to the data. Do you believe him?
I don't have any information either way. I can tell you, though, as a member of the Intelligence Committee, that if the Chinese want access to that data, they will get it. They might not tell TikTok, but the Chinese are adept at breaking into pretty much anything they want to break into. And by the way, that's something to think about, even if all of a sudden the servers were located in the United States. I wouldn't tell you that I'm 100% confident that the Chinese can't get it there, too. I can't tell you that the Chinese can't get into Facebook servers. So I don't know the answer to the question, but it's a little more complicated than just simply where their servers are located.
Tell you what's also been complicated for technology investors, for technology builders, has been the banking system of late. Congressman Hines, and I know you've got some expertise there, former banker Goldman, of course, on the Select Committee for Economic Disparity and Fairness in Growth. How concerned are you at the moment that companies that are building have access to funds that they need and have, well, security in the overall banking system here in the United States?
I feel very good about the overall banking system. I was a freshman here in 2009 when we really thought that JP Morgan and Citibank and other huge banks were going to fail, and there was a very real risk that they would. The sector itself is very strong right now. We obviously saw problems at 3 or 4 banks. I think that the regulators and the Federal Reserve stepped in a very competent way to handle that. I do think we've got a little bit of work to think about a world in which, depositors only deposit the guaranteed amount at small and medium-sized banks. That, of course, creates a lot of pressure for consolidation in the industry. But to answer your question, I think today we may see stock prices move up and down in the coming days and weeks or so. But my sense is that overall the banking system is very, very safe, and depositors should not be worried about their deposits.
Congressman Jim Hines, we thank you so much for your time, your expertise across, well, all areas of technology today. Meanwhile, coming up, shares of Block is plunging today as short seller Hindenburg targets Jack Dorsey's payments company. We're going to give you the details as to why. This is Bloomberg. Betting against Jack Dorsey, Hindenburg Research strikes again. It is a forensic research outfit and a well-known short seller. This time, it's claiming that the company Block that Jack Dorsey runs was facilitating fraudsters who, well, fraudulently used government stimulus programs during the pandemic. Block, which owns Cash App, Square, Tidal, the music streaming company set up by Jay-Z, is down 20% on the news. Hindenburg Research claims that after a 2-year investigation, they've understood Cash App was facilitating billions in government payment fraud. Basically, multiple people would use the same bank account to claim government stimulus. Hindenburg says these were brazen red flags of fraud and down to shortcomings in compliance. Now, Hindenburg also takes issue with other areas of Block, saying that Cash App is overinflating the amount of users it has, that it doesn't like the way in which it's charging merchants every time you swipe your card, and also is critical of the $29 billion deal that was made to buy Australian buy now, pay later company Afterpay. So far, we're yet to hear from Block's own executives. But we do know that some analysts have weighed in already. Baird, for example, saying, look, they are worried if there's any criminal activity, what that does to investor sentiment. But from their perspective, the shares are good value. Someone's got even more information than this. Bloomberg's Jenny Serrain in London, helping break down this story. And so thoroughly, Jenny, thus far, we've still not heard from Block. You've reached out, many other people have. What do we know in terms of other implications to the business model here? Because we know that there's been regulatory concerns, shall we say, versus PayPal's Venmo and the likes.
Yeah, I think there's a few different pieces that I think folks are really keying in on with this. I mean, I think any implication that criminal actors are using Block's Cash App to facilitate their transactions is really bad news. I think that's when you get regulators looking at you. They could impose different kinds of penalties, whether that's monetary or, different remediation activities. So that's something that investors will really key in on and want to see further proof of, and probably hear from the company on, if whether or not this is true, obviously, first, but if it is, what steps are they taking to try and stop that? So I think that's probably the number one thing folks are keying in on. And a lot of the other stuff that they laid out, it's stuff that was probably a little bit known by the investor community, but seeing it all laid out in, this very lengthy report at the end of a 2-year investigation, it is sending kind of chills through not just Block stock, but really the entire payments industry.
Well said. Interestingly, this is a company that has fallen from grace in terms of a market capitalization perspective since the, area of 2021 when we were still very much caught up in COVID concerns. Was that to do with some of these worries around the broader ecosystem and ultimately governance of it?
No, so I think it's another example where, you've got a macro issue weighing on a stock, which is during the pandemic, Block and all of the other big payment processors saw volumes really balloon because folks were trapped inside and suddenly spending a lot more money, online and doing a lot more online shopping, and doing a lot more mobile money transfers. So Cash App has really taken off in the past few years. But that's slowed down, it's hard to keep lapping such intense growth, and so they've had to lean on new areas, and so that has just been a broader overhang on the entire payment sector, and it is not Block specific. What is Block specific today is this accusation, from Hindenburg that we could be seeing widespread fraudulent use of Cash App, and that's something that it would be very specific to this company, and it's why their stock is down, as much as it is today.
And Hindenburg Research targets do tend to see sustained pressure on their stocks. Jenny Serrain, we thank you so much coming live from London for us. Coming up, from Toshiba to AI to EVs, we will run you through all the rest that's going on in technology. We're talking tech next. This is Bloomberg. Nvidia Chief Technology Officer Michael Kagan says a new revolution in technology will present multiple opportunities going forward for his own company. He spoke with Bloomberg's Tom McKenzie.
Every new technology and every new revolutionary technology, it's opportunity for doing good things and for opportunity for doing bad things. And we definitely need to be aware of this and be ready to mitigate this. We at Nvidia, work very closely with collaborating with the regulations. We are to extent that we can, make sure that our technology and our products don't get to the bad hands. We can't trace it down all the way to the end user, but we make sure that people that we sell our things for, our technology for, and our products for, are not using them in the way that will damage the society.
Okay, so you're confident that in terms of the framework and the focus on ethics of AI, that Nvidia is doing enough?
I think Nvidia is doing more than enough. We are on the very extreme case side of this. We are definitely not doing anything in the gray area. It's very black and white. We are not getting to the gray area, and we're also developing the technologies that will enable to mitigate cyber attacks in the data center. Actually, now there's people even more dependent on the data center infrastructure, and we are building the technology that will enable the provisioning and mitigating the cyber attack within milliseconds or seconds versus few months that is what it takes today.
You have customers, Nvidia has customers, of course, all over the world. You're a global company. Some of those customers include Chinese companies, Alibaba, Tencent, Baidu. How do you serve your Chinese clients and customers given the ban by the US on those high-end chips, the A100s, the H100s? How do you continue to serve those Chinese clients?
Okay, so first of all, if you look at the Chinese market, it's a big market, and they better have the computing accelerating technology, so they will use a reasonable amount of energy. There is a ban on the restrictions of sell some type of chips to China market, and we have chips that comply with these regulations. We're definitely not violating any regulations of the U.S. government. We have products that we can serve China market within restrictions and within the rules that are imposed by the U.S. government.
Nvidia CTO there, Michael Kagan. Time now for talking technology, and we're going to stick on the theme of AI. Startup Character AI, which lets people create their own chatbots, has raised $150 million in funding round, led by Andreessen Horowitz, notching a $1 billion valuation from investors. Now, Sarah Wang, a general partner over at Andreessen, will join the company's board as part of the deal. Toshiba accepted buyout an offer from Japanese consortium, moving a step closer to ending years of turbulence for the company. 17 Japanese companies and 6 domestic financial institutions will participate in this buyout. It's led by the domestic private equity company Japan Industrial Partners. The $15 billion bid has sent the US-listed shares rising more than 9% in New York, the most since October. And finally, let's check out Ford, because it is predicting losses in the EV business that will grow to $3 billion this year as it spends big on new models and factories to take on, of course, Tesla. The deficit matches in accumulated EV losses over the past couple of years. The company, well, it's keeping its profit forecast for the current year unchanged. And coming up, we'll have an interview, of course, the CEO, and more, in fact, from the CEO of TickTok as well, on the Hill today. What the actual security concerns are at stake there. And let's just take a look at some of the other social media companies that are born here in the United States. Because, of course, there's a bit of a competitive edge here. If we do see a ban on TikTok, what does it mean for the likes of Snapchat? Well, it's rallying. Hopes that perhaps that becomes to fruition for some of its investors. Meta, up more than 3.5% as technology in broad part does rise. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, where it's 12:30. It's 9:30 on the West Coast. It is 4:30 p.m. in London. Stocks, therefore, finishing the day in European trading. And Krita Gupta, she's got the latest.
Yeah, Caroline, a little bit of a mixed picture on the continent. You are seeing a lot of different kind of diverging reactions when you go from country to country. Overall, the stock 600 down by 0.2%. Again, no major conviction in that trade. Nevertheless, you did see the French and German indices really just ending flat. I would say the major mover, the major country to pay attention to today was England. You see the FTSE 100 down a whopping 0.8% on the back of the BOE, hiking their rates by 25 basis points. They're saying, look, there are a lot of concerns about recession, but it looks like we can avoid it for the time being. Nevertheless, with a rate hike, the natural reaction, the equity market pulling stocks lower. Let's go to the FX market, though, as well, because a real read-through into the cable rate. We are looking at 123 on that currency pair. Some strength in the pound. And this is important as we talk about what could lead to more weakness in the dollar now that the Fed is no longer the most hawkish central bank around. Certainly something we're going to be keeping an eye on. But again, 123, sustainably above 120. Good news there for the British pound. I want to get to some of the individual movers. Well, let's get to the yield space first, because again, the yield, the story, the hikes that you are seeing around the world, still not actually showing up in higher yields. And this is what's interesting, because even though we have these banks that are continuing to hike, are continuing to tackle inflation, yields are continuing to drop and feeding into the U.S. session as well. So certainly something to keep an eye on there. 329 on the front end of the curve for the UK 2-year-old, which finally brings me to those individual movers. The banking stocks are crucial. UBS taking another hit, down 4.3%. That continued concern. What does a UBS with Credit Suisse under its umbrella really look like? How much risk are they really taking on? HSBC as well, some weakness there, down about 2.8%. Coming after a reshuffle over at their investment bank. They've got new leadership under Greg Guyette, something to keep an eye on, something investors aren't smiling on today. And of course, Sanofi, one of the few stocks in the green, higher by about 6% in the European session, soaring on a successful trial for a key drug for lung cancer. Caroline.
Important topics to note. We thank you. Let's get back to the world of technology. Let's get back to TikTok, of course, the CEO giving testimony on the Hill. We're worried about the security concerns around the app. Shou Chew, of course, is continuing to try and broaden out this conversation, not just on TikTok's data privacy, but the entire social media industry at large. He says the company's Project Texas, of course, that plan to firewall all US user data in the United States, is more than some other companies can promise. So is TikTok only app of concern? Ivan Sereni is with us. He is founder and CEO of Ferroot. It's a startup that provides technology solutions for corporate customers dealing with so-called data creep, helping them comply with privacy regulation. What's so fascinating, Ivan, about the reporting that you've just been doing is that, well, a report that you reviewed websites of more than 3,500 companies, and basically you're seeing so-called tracking pixels from TikTok's parent company present and even some government websites. Can you tell us about how difficult curtailing data collection will be for TikTok?
Yes, thanks for asking. That's a very great question. It's one of the things that we found was really eye-opening is just how many pixels and trackers are actually collecting sensitive user information without ever asking for consent, and very often without even companies whose websites they're running on being aware of those pixels and trackers being present there. And that it is very, very common. It is not just a TikTok concern; it's broader concern, obviously. We've seen Google, Meta, Adobe, Microsoft, all kinds of tech companies being present there. But what is really concerning is that, for example, ByteDance and TikTok were banned by executive orders, and they were still present on government websites.
So, if we do see a ban, for example, of TikTok here in the United States, does it do anything?
Well, ban or change of ownership or a ban will not necessarily solve all the problems kind of once and for all. What I believe is really concerning is that there is no governance around what actually happens with the data that is being collected. It's less of a ban of TikTok, more of having clear rules for all the players to follow and have third-party validation, maybe auditing, and accountability and responsibility for bodies who do not follow the rules and violate them.
Can you, just for those who are not particularly adept to understanding what embedded pixels really mean, what is it? What is happening? What is being teased out of us in terms of our own data?
Yeah. So what are pixels? They're just like mini spy balloons. Remember that giant spy balloon a few weeks ago that Air Force shot out of the sky? So pixels are like tiny spy balloons that are embedded into websites we all use every day, like when you book your appointment with a doctor, when you're perhaps renewing your driver's license or shopping or doing anything else. And they're watching everything you do or a person does. They can collect, and often we see they're actually grabbing everything that you're typing into the forms, like your passwords, your credit card numbers, maybe your diagnosis, your health records, and anything else. So that's a really big concern with pixels. And what we found that they're actually doing.
Why, if we went to executives at not just TikTok, but as you mentioned, whether it be other companies, Microsoft, Meta, what would they say they're using them for in a legitimate manner?
Yeah, so pixels are legitimate business tools because companies need to market, they need to advertise, they need to attract customers, they need to grow. So pixels do have very legitimate rules, purpose. What they don't have is clear rules that they need to follow. And very often we've found that pixels are doing way more and collecting way more information than anyone realizes.
Okay, but how can you put the genie back in the bottle? If these things are already out there and you've said through your 3,500 companies and organizations that you've looked at, was it websites across 27 states of US state governments are being implicated here? What's to be done? Can you clean up the system in any way, or is it more just about disclosure?
Well, cleaning up, there's no magic bullet. There's no magic wand to, that will solve the problem once and for all overnight. But there are steps, definitely. Some jurisdictions already have taken clear steps. Like in Europe, there's GDPR, and people are being held accountable for breaking it. So it's a continuous clarity, driving clarity, and clarity of what needs to be done, just like what has been done in the financial sector. And we've seen that financial sector is now a lot more robust because of regulations.
Ivan, of course, you've made this data public. Have any of the US state governments that manage the websites come to you and said, what can be done? What are you doing with your own data that you're managing to now bring to light?
Yes, definitely. We've been reached out by Department of Justices and teams from various states already. And just like in a Wall Street Journal article published a few days ago, they mentioned that even the states that they have validated where TikTok was present and collecting information, that they quickly went in and remediated to make sure it's not there and that removed it. So there is technical measures that can be put in place to prevent this, but there is no priority on it or a clear awareness how common that issue is. But it is solvable.
Let's also just bring in our own audience for a moment, Ivan. And we went to them sort of ultimately asking, do you care very much about TikTok and whether or not they should sell off to a US company, whether they even use the app? I have to say, it's seemingly our audience, a technology-focused audience, actually half of them basically don't use the app at all. I'm interested in whether you think people care about the data, the consumer. How would you say to them that you should care about where your data is ending up?
Oh, that's a very big question. Well, why we care or why to care is, first of all, it's the freedom. When it's important, protecting the freedom to me personally is really important. So I'm based in Toronto, Canada, and right now there are concerns in the talks that there were interference by China in the Canadian election process, for example. Or there's many other topics that are being brought up in the current congressional hearing with the CEO of TikTok, where the data is being collected or has been accessed for spying, for surveillance on members of the military, members of sensitive groups of people. So there's definitely, I see personally, there's a definitely big impact on us as people. Maybe not felt immediately right away, but over some period of time, it will definitely creep in and can impact all of us.
Ivan, thank you for bringing us your data. Ivan Sereny is the CEO and co-founder of Fruit. We thank him. Meanwhile, let's get over to another Chinese-related company, Tencent. It's surging, actually, more than 8%, the most in about 4 months, with traders citing unfounded talk that China's new premier, that's Xi Jinping's top deputy, Li Qiang, toured the company's headquarters. Though there was a visit from a Communist Party regional representative earlier today, according to the official WeChat account of a local state media outlet. The rally also comes after the China social media leader, of course, came out yesterday with news of a resumption in revenue growth, albeit a tiny bit, in its fourth quarter. Coming up, we'll talk all things crypto and regulation and more. Han Ventures' Chris Hines with us next. And of course, we're watching shares of Coinbase as the company gets SEC notice on the intent to sue over its offerings. We're going to digest all of that with Sonali Basak. This is Bloomberg. Hollywood for a moment. Apple is trying to raise its profile there and lure subscribers into its streaming service by planning to spend big, $1 billion a year to produce movies that will be released in theaters, no less, according to sources. Let's bring in Bloomberg's Mark Gurman, who has more. And just how big a step is this to be teaming up with Scorsese and the like and actually bringing it to theaters for us to go see?
Yeah, the significance here is that they're upping this budget for theatrical, right, for full featured-length movies, for movies they want to put in movie theaters, pretty significantly, right? They're in talks with a movie with Scorsese for almost $250 million, right? That would probably be the most that they've spent on a movie during this whole tenure of Apple TV Plus since it launched in 2019. They're thinking bigger and grander. They've seen how Coda has done. They've seen how their other shows and movies have done, how they're winning awards, Oscars, and the like, right? They're very excited about this. They want to keep buying new content, making new content as a way to keep people buying subscriptions to TV Plus.
Yeah.
So this is quite significant, according to the reporting from our Thomas Buckley and Lucas Shaw.
But Mark, to that point, they've obviously had success, awards, but haven't managed to lure in people to the streaming service. They've got, what, like 20 to 40 million subscribers versus 200 million more over at Netflix. So why do they think this sort of marketing is going to win out?
Yeah, I mean, right now it's very clear that Apple is getting a lot of its subscribers and watchers on TV Plus on plans. Like, for instance, I have T-Mobile as my phone carrier, and my plan comes with Apple TV Plus. So I'm not paying out of pocket to Apple for TV Plus. They have some sort of agreement that lets me and other T-Mobile customers get it for free. Many Apple products these days come with 3 months free of Apple TV Plus. It used to be a year free, right? There's the Apple One bundles where Apple TV Plus is part of that. So it's unclear how many people are paying the $6.99 a month for Apple TV Plus. Clearly, Apple wants to widen that, right? And the way to do that is to get better and better content that you're not able to get at competitors like Amazon, Netflix, Hulu, Disney, etc. Obviously, Scorsese is a big name. There's other big names. There's an Idris Elba TV show coming to TV Plus that I saw as I was scrolling through TV Plus options last night. There was Schmigadoon that was quite popular, Ted Lasso. Everyone is talking about Severance. Clearly, Apple has some cultural hits on its hands, and it has so much cash, it wants to do more and more and more. The only, pause I have is how do you square that with the budget cuts across the rest of the business? But I guess you really have to keep investing, and they probably put the bucket for TV Plus investment in the R&D budget rather than the OPEX.
Interesting nuances there. We thank you. It's helping some of the cinema chains today as well. Cinemark and AMC doing well on the back of it. Mark Gurman, thank you. So much more ahead. We're going to dig into crypto from New York. This is Bloomberg. Let's talk crypto now. We've already talked about Block earlier in the show. Shares sinking after the Hindenburg research says it took a short position in that company. Now let's turn to Coinbase, that's also under pressure. That's because the crypto exchange says it received a notice from the SEC formally declaring the security regulators' plans to bring an enforcement action against it. Shares currently off by another 20%. Bloomberg's own Shonali Basak helped talk around this news break at analysts. Jefferies Mizuho say, look, basically a third of net revenue of Coinbase could be affected by this.
Well, what's strange about this Wells notice and what they've heard from the SEC is we've seen the SEC target different companies for different products, but this Wells notice seems to be encompassing multiple parts of the business at the same time. That is parts of the exchange business, the wallet business, the staking as a service business, and therefore you have Coinbase's executives fighting back and saying that the SEC has been neither fair nor reasonable throughout this process. Remember, we have seen the tones change from Coinbase for the last year, really be very open and vocal about their coordination with the SEC and trying to work with them. So things are certainly escalating and coming to a head here when it comes to different parts of their business. As you see, the stock is certainly reacting to this news, but this is a Wells notice. This is an intent to take action, but not action yet. I think what's interesting here is that we don't know where this goes from the SEC's perspective, but you do have Coinbase saying that they welcome a suit and legal action if this were to escalate here. So let's see if the two sides really reach a reasonable solution here, but certainly the direction of travel has been in the direction of fighting about what the meaning of crypto is.
Oppenheimer analyst saying that the unhealthy regulatory environment is why they're currently downgrading the stock. Sonali's going to be sticking with us. Just a full disclosure on my part, my husband is a senior manager over at Coinbase, but nevertheless, we're going to dig more into this with Hahn Ventures Chief Strategy Officer, Chris Lehane, because, Chris, you have expertise. You, of course, have a focus on Coinbase now. You're someone who used to serve in administrations previously. You understand the conversation that needs to go on between new, innovative businesses and politicians and regulators. I'm interested, when Coinbase has met with the SEC more than 60 times over the last 9 months, what is not working here?
Yeah, it's a great question, and thanks for having me. I think you guys actually broke this news yesterday. Bloomberg did. So a couple thoughts here. First of all, I do think, just stepping way back, that this is part of the broader journey that I think any innovative company is going to have, particularly one that's trying to ultimately disrupt the status quo of our financial system and dealing with regulators who effectively want to maintain the status quo. So I think just understanding that this is going to be a long journey. I was particularly struck by the fact, and I think Coinbase made this really clear in their communications yesterday, that they, effectively went through an SEC process, right? Their S1 was reviewed. It was part of their process of being able to become a public company. And that S1 really laid out their business model. And so now you have the SEC basically coming back on something that had already gone through a review process. And I think that really does speak to why Coinbase has reflected a lot of confidence in terms of where they are on the law, the facts, and this process going forward. And look, we're in an atmosphere, and going to your core of your question, where basically we're getting regulatory action and clarity through enforcement. That is not the best way to develop policy in this country. I was around way back when, in the mid-'90s, when Democrats and Republicans worked together, passed the Telco Act. That became the framework for what ultimately became the internet and why it was based here in the U.S. and not in other places in the world. And policy through enforcement is not the best way to optimize for a first principle. Yeah.
Chris, what about just recognizing here that Coinbase is the largest U.S. crypto exchange? It's a publicly traded exchange. It has been given the blessing of investors as well as the SEC, to your point. What would happen if it goes down the road of the SEC cracking down in a much more significant way? Do you think that the ultimate goal here is to stifle the crypto industry? Because given the publicly traded nature of this company, this would be the way for them to do it.
Yeah, well, you have this action. You have a lot of activity taking place with, quote unquote, debanking, where any number of institutions are purportedly taking steps to make it harder and harder for the crypto sector to do banking in this country. You had an Electric Capital report. Electric Capital is a venture capital fund here in the Valley that just the other day was released, showing that there's 1 million high-quality engineering jobs on the table that are going to be created over the next 5 or 6 years. The real question is not whether those jobs are going to be created. The real question is, do they take place here in the U.S. or do they migrate abroad? And what is really telling is that if you look around the world, the UK, Caroline, where you were from, the EU, Japan, Australia, Dubai, Brazil, all of these places are moving pretty aggressively to put a regulatory perimeter around crypto to give it the certainty and clarity that folks are looking for, but specifically with the intent, as they have stated, to become crypto hubs. They understand that this technology will play a really critical role in the future rails of financial systems and want to make sure that they actually own some of that real estate. Yeah. That's really in sharp contrast to where the U.S. is. And ultimately, those developers, those engineers, those entrepreneurs are going to follow where those countries are going. Yeah. And I really do fear as an American that we are ceding our leadership role on this. This technology is taking place. It's already happening. There's 400 million people across the world who use it. 1 in 5 Americans who use it.
I know, but Chris,
the question is it here or abroad?
We've only got 1 minute.
Sure.
They haven't done a good enough job at making people feel confident and comfortable with using this sort of technology.
Yeah, look, I think that's a very fair point. I think ultimately a part of this is the crypto space themselves making sure we're demonstrating the utility. The fact that 40% of those folks who hold crypto in the U.S. do so because they're using it for remittance purposes. The fact that people use stable coins to protect themselves from inflation, to get access to a financial system that they currently don't have access to, or it's hard for them to have access to. So no question we need to make the case. But it's also really important to remember that we're sort of at a phase in this technology that would have been early 90s for the World Wide Web, early 2000s for mobile, some of these same questions would have been posed then as part of the pace of technology. AI was first introduced in 1968, right? Now you're finally getting to a place where people are seeing it being able to be used.
Chris Lehane, Hahn Ventures, thank you for that. Shonali Basak, we thank you for rushing back to do it. That does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. Much more conversation online. Join us on Twitter. This is Bloomberg.